Joining us for a closer look ahead of the first trading day of this week is Ed Yardeni. He's president of Yardeni Research. It's great to have you here this morning.
Thank you, Kelly.
I don't know if you caught it, but I did ask Secretary Yellen about the T-bill issuance.
Yes, I did.
And
she loves T-bills.
If only I had done T-bill and chill myself, like Warren Buffett. So she demurred the idea that she did or that we should increase issuance on the short end. But in a nutshell, are you still worried about the action here with 444 or so on the 10-year?
Well, I think some of the volatility is obviously of a concern. The level doesn't particularly bother me. 4.5% is kind of where the bond yield should be. It's normalized. We've been looking for 4.5% plus minus 25 basis points for this year. And it's been down a little bit below that, but now it's back exactly where we think it should be.
It's weird because there's so many problems to talk about, but at the same time, I always think of you as someone who comes in and says, calm down, and markets go up in the long run. And like Joe said, we were at what, 3,600? What is 3,600?
We were worried. Mike Wilson's worst case scenario was 3,000. Just a couple
years ago, 2-3 years ago.
Yeah.
And here we are now. So all of the following, I just want to preface with that. That said, you've written about, what's going on with the fiscal deficits and just how bad they are.
Sure.
And if we can't solve that, we're not going to solve anything on the trade. And your note this morning on Taiwan, just saying that, look, if the president's using his bullets now, which he's threatened to use if they were to take, we're already in the middle of this trade war, and now we're backing down from it. If you're the Chinese, are you going, what are they going to do? Anyway, so those are all the worry spots.
Yeah, there's plenty of things to worry about, but the market is actually holding up pretty well. We're still basically in correction territory. We got very close to bear market for the S&P 500. The NASDAQ got into a bear market for, a few days, and now we're back in correction territory. I think we probably made the low in this sell-off on April 8th, right before the April 9th shot to the upside. I think it's hard to really short the market from here when you never know what the president's going to back off on next, what he's going to pivot on next. And the market has shown a willingness to go up on just minor promises of a 90-day postponement. So I think that's helpful. And look, I think the data still show that the consumer is spending. Americans are great. When we're happy, we spend money. When we're depressed, sometimes we spend more. As long as there's the wherewithal. And the initial claims data show that the labor market's hanging in there remarkably well. You don't see employers just saying, you're fired because of these tariffs.
Yeah, but so it looks like what happened was and is a sentiment shock, and maybe a political shock that you think Washington is responding to, because otherwise they could look at the hard data like you're talking about and say full steam ahead. Yeah,
the soft data is soft for sure. The consumer sentiment is extremely weak. I'm not a big fan of the consumer sentiment survey. It's very twitchy. It's right now that it's mostly being driven by inflation expectations. In the past, those inflation expectations were driven by the price of gasoline, and here they just soared to like 6%. And you go by fill up, gas is actually lower. I think people are missing the fact that we actually are getting some stimulus here from lower energy prices. So all in all, I think the consumer is going to continue to spend. I don't think we're going to see a big increase in unemployment. Maybe we're going to slow down on hiring because of tariff uncertainty. But I think businesses are going to hoard labor because labor is still in short supply, especially skilled labor. And I think productivity has been making a big comeback. I think it's stalling out here, but I think it will continue to make a comeback over the rest of the decade.
So do we need to worry about the fiscal situation?
Well, I've been doing this for over 45 years, and I got a bunch of books on my bookshelf back from the 80s and 90s about living beyond our means and the debt bomb and all these. And meanwhile, we're, as you said, look where we are compared to all the doom and gloom that was out there. My attitude is I'll worry about the deficit when the bond market worries about it. And I guess arguably you could say that was certainly a concern last week. But again, look at the level. And the other thing is Janet Yellen, you asked Janet Yellen about the bills. She was very clever on November 1st. She said, hey, to the bond vigilante, she said, you don't like my bonds and notes? Take my bills. And the thing about it is, if the Treasury issues more bills and reduces the supply of bonds and notes, I don't think that the deficit is a problem financing it at all. And as a matter of fact, it forces the Fed to buy those treasuries. So instead of the bond vigilantes being the control on inflation, it's all going to be all up to the Fed if they do more and more treasury bills. And I think that's probably where Besant's going to go next.